Hi, this is a Bitcoin morning brief, and it's just Tone and I today. I hope that's okay with everybody here. Tone, we barbecued yesterday. Yours looked fun.
Yeah, it was good. And I guess the other guys are still recovering from their holiday weekends. But though I don't think it was a holiday in Italy, but Giacomo seems to be everywhere. Apparently, it was a holiday in the UK as well. Yeah, it was good. I did a lot of driving around this weekend, had a couple of barbecues, a couple of family events as well. Yeah, but now it's time to, get back to work.
I'm not gonna lie, Tone was trying to do a trading Bitcoin show and have me host yesterday while he was driving. So sorry for everybody that wanted one in the morning, but I said that he is not allowed. I put some rules on the table. Oh wait, hold on, I gotta get the screen share. Yeah, for everybody that is angry at me wearing Harvard, it was a good lecture, a guest lecture that I gave a couple times and at MIT Sloan. So just saying it was about international development. And people should maybe check it out because, yeah, we're all in it for the revolution. Okay, let's go for it. Tone, we're going to do today.
All right, let's start.
All right.
I find this story really, really like funny. This is really funny to me, but go on.
Funny. Oh my God. It's typical from what's going on, but obnoxious. Yeah, probably Mr. Wall Streeter. Let's see. So Poloniex crypto exchange users claim that accounts have been frozen after ID policy updates. Okay, I do find this kind of funny as well. Okay, I fully admit. So 2 days ago, apparently there were complaints about account freezes after Poloniex apparently issued mandatory new identity certification processes or procedures. So in my opinion, and since I guess you and I can like fight back and forth today, a little bit more fun. No, it just looks like oversight on their part, but it's very surprising in my eyes because you have Goldman, well, Goldman's back circle, right? But a great company, huge cash infusion. I mean, they're like massive right now. And with a $400 million deal, and now they're making just kind of like it looked to me like a simple change in their identity verification procedure, and the whole thing freezes up. So I don't know if I'm understanding this incorrectly, but it seems funny on that part for me. Tone, what was your takeaway here?
Well, I saw a bunch of tweets yesterday. I didn't really save them or anything like that, where people are like angry at Poloniex for instituting a KYC policy, saying this is crypto. You're not allowed to ask for my identity, right? Like that's the part that's funny to me, right? So let's take this one step at a time, right? So first of all, what part of Poloniex is being acquired by Circle, which is backed by Goldman Sachs, both American companies in the financial space. I mean, like, do you need like a personal memo of someone walking up to your house and telling you, hey, the probability of you anonymously trading on this exchange going forward are actually going to be zero, right? Like some of these people, I'm amazed. I'm really amazed. Like people ask me like personal questions on Twitter. Tone, when do I buy Bitcoin? Tone, when do I sell Bitcoin? Tone, what is the price going to be on February 3rd, 2019, right? Like these personal questions, like I am their secretary, right? I get the same thing on Telegram all the time. If you're going to send me a direct message on Telegram, it better be something that's important to me, not something that's important to you, right? It's people just really don't get it. Like I have 1,000 people that have my direct contact on Telegram, plus another 1,000 that probably talking to a scammer. Like if you're gonna ask me a question that like is only important to you, why do I need to take time out of my day to answer you? Like I'm sorry guys, I'm actually busy. If you want to see more content, I can't stop and answer you personally. So all these people that are completely caught by surprise that Poloniex is instituting a KYC policy because they're, are now a legitimate company. These people like literally expected someone to come to their house and hand them a memo saying, you may want to move your money now. So it's just silly to me how people have a complete misunderstanding that the only thing decentralized in anything related to crypto is Bitcoin. everything else you do is centralized, right? Like unless you are holding on to your own private keys and you are sending them to wallets of other people that are also holding on to their keys, that is the only thing that's actually decentralized in this process. Everything else is completely centralized. And if the overlords of that centralized process, want to KYC you, they will demand KYC. If they want to return funds to their friends, Ethereum, they will return funds to their friends, right? Like if they want to implement a coding update, they will, freeze the blockchain and get it done. Be trash. Like it's and they will have like one miner do it. Like everything else in the space is centralized. The only thing we have is Bitcoin and only when you send it peer to peer, right? If you send it through an exchange, it's centralized, right? So I don't know what these people expect. Now, the right way for Poloniex to do it, of course, is to allow people trade all they want, and then when it's time for them to retrieve the funds, they have to do the KYC process, right? Now, if Poloniex is actually freezing you from trading until you actually KYC, that could also be their policy. It looks like people are starting to complain that they've gone through the KYC process, but for some reason their accounts are frozen, that they can't even trade. That just goes to how incompetent Poloniex exchange probably is, because I've seen the Poloniex exchange and back in the day, and I looked at this thing and I'm like, what idiots would trade on this thing? Like, again, I have spent 15 years trading traditional markets. I know what an exchange is supposed to look like and the real tools of a trading exchange. Everything was a clown show in all of crypto, which is another reason why I don't actually trade, because the tools are just so childish and amateurish that there is nothing there that even compares. This is why when a lot of people start out trading in crypto, this is all they know. But if you spent 10 years trading like on a professional exchange, you look at these crypto exchanges and you can't help but laugh. So if Poloniex is so incompetent with their technology that your account is frozen even after you KYC'd, that's that just says that how bad their technology is. Now it would be nice if they still let you trade but not let you withdraw those funds. And the 400 million that Circle paid for Poloniex, they'll probably get that money back in crypto of all the people that are not going to KYC and will never get their funds back because potentially they could be violating other laws by KYCing themselves. And unless they get their friends to KYC for them. So it becomes a little bit complicated. Like if you were trading on Poloniex and wanted to maintain your anonymity, you should have been out of there a year ago. If you didn't, well, you're kind of stuck.
Are you saying that Goldman Sachs and others don't want to get in trouble with the SEC?
Yeah.
Yeah, I think that makes a lot of sense. And
right. Your $1,000 on Poloniex is really gonna, and you going irate on Twitter with your 200 followers is really gonna scare Goldman Sachs to potentially get $1 billion fine from the SEC. Yeah.
Okay, that does make a lot of sense.
No, look, we do make fun of Goldman Sachs owning Poloniex. Goldman Sachs might not even know they're involved in Poloniex, right? Because it's like 3 turtles down. Like they invested in Circle. They don't even own Circle. They just invested in Circle, and then Circle, buys Poloniex for I don't know what reason. Probably because they want to collect on fees. But again. Like if Circle has a connection to Goldman Sachs and you want to build a crypto exchange to trade, Bitcoin and even shit coins, go hire some actual, real exchange professionals, go hire people from Interactive Brokers, go hire people from Options Express, Thinkorswim is nowhere near as good after they got bought by TD Ameritrade. Go hire that old team, go build a professional exchange. You'll probably be a lot better off than wasting $400 on Poloniex.
Yeah, I mean that does make a lot of sense. I'm still kind of laughing at this one. There's no way that any of this would fly. if through their acquisition, they didn't make sure that they cleaned up Poloniex and made sure that there was KYC policies, made. But yeah, I mean, it could also, right, the strategy could be futile and usher in kind of a Streisand effect to boot, but like that, yeah, I think we we got this one. All right. So new twist on Lightning Tech could be coming out soon to Bitcoin. So Lightning Labs co-founder, I'm going to butcher this, but I'm going to try.
Everyone just calls him Lalu, or Roast Beef is his nickname. He's got
Roast. Oh, yeah. Okay. He's killing it.
Same guy,
okay,
yeah.
That's a little bit helpful. So Roast Beef and Blockstream's Christian Decker and Rusty Russell, they've published this new proposal, which imagines an alternative simplified way of making off-chain transactions with L2, but spelled ELTOO. So what they wrote in this article is that L2, on the other hand, this is specifically from the article, only stores the most recent off-chain transaction data, solving the well-known information asymmetry problem. That is, if something happens to the device you're running your Lightning app on, say your smartphone, you might lose access to the whole history of data. And I did find it interesting that later Decker actually explains that, he had this problem himself, which is what prompted all this. Tone, what's going on? What's going on with Lightning here?
Well, I'm not going to be able to talk about the details. We really got to get some of these people from Lightning Labs, on a show with me and Jimmy. Maybe we can talk a little more about this tomorrow if Jimmy and Giacomo are both back. I'm not going to talk the details of Lightning. Obviously, I'm not technologically capable of understanding the details. What I can tell you is this is what I expect from some of the smartest computer engineers in the world, right? They're going to sit there and however long it takes, and they're going to get it right. Because again, we're talking about value transfer and decentralization. Lots of other systems don't care, right? We're going to get to EOS in a minute. We already saw Ethereum. We're seeing a lot of other stuff where, they move fast and break things with other people's money. You can't exactly do that with Bitcoin. So I will say that, hey, a core developer realized a problem and been working on it for a while, and they want to make sure that everything is fixed. This is also why they put a limit on how much Bitcoin you can put on a Lightning channel, and that limit is very, very small. I think it's like 0.5 Bitcoin or something even smaller, or 0.05, I don't remember. And it was small for the purposes of if something goes wrong, a lot of money won't get lost. This is the complete opposite of every other project in the crypto space that just, wants to make as much money as they can for programming it and have a backup in case they got to walk away, run away, and start another, fake blockchain. But just read the article, right? Like read the backstory of how this came about and how it was thought about, 5 years ago. And that system wasn't really working, so they came up with a new system. And now they're going back to their thought process of 5 years ago. Hey, maybe we can still utilize some of those ideas of sequence numbers, and maybe we have a better way of doing that now. It just goes to show you how they literally plan for the worst case scenario and then see what happens. I think Kevin Pham has had some really good tweets. I think he mentioned something like that, where he says, yeah, it's like the opposite of what Vitalik thinks. Vitalik hopes and programs for the best, and then he's upset when bad things happen, right? You're supposed to program and think of what's the worst case scenario, and then hopefully, good things will slowly build on themselves because you're prepared for the worst.
Yeah. This really, I'm not going to lie, and thanks for, indulging me today, Tone. Actually, you didn't even say if I'm allowed to, but I'm just going to go for it. This really, really gets me as having founded a couple of my own companies and working in VC that I don't know why people don't obviously in commercial projects, right? You launch your MVP, you do this, don't go fast and break things, which is Zuck's model, right? But if an MVP could be seen rather than a minimum viable product as a hypothesis, right, of getting back customer feedback data and then iterating accordingly, but launching something just basic and seeing when crap fails, that is just exactly your point. This is the worst possible thing I think you could do for Bitcoin to ensure that you get mass adoption. I mean, you know, this is great from a business perspective that he's seeing this problem and, you know, and they're trying to fix it. And that's great. And that's what actually a business should do, right? I understand that this is Lightning Network and it's very different, but because it's so different, I don't know why, you know, exactly your point on Vitalik, right? Like we need to take a measured approach, right? Incremental steps of progress, because each screw up actually really destroys mass adoption, right? And if there's new people trying to get into the space, right? Like the real cost of losing customers for us in Bitcoin due to bad user experience for a business or hacks and all this stuff, like really can't be underestimated. And
right.
like,
Right. It's worse than that, right? Like this is what people don't realize, right? Like I said, last week, everyone was talking about how great Verge is because Pornhub was taking it, right? Like 2 weeks ago, right? And then Verge gets hacked, right? At least all the Dash trolls have disappeared, right? Remember, Dash is the greatest cryptocurrency ever, and like they all are like Litecoin. Most of the Litecoin fans have gone into hiding as well, because I remember the Doge parties back in 2014. You should see those videos. I've been to some of those Doge parties. It was incredible. It was like no coin. Maybe Ethereum's parties are as big as the Doge events were back then. And what these people don't realize, right? Like this week's, you know, garbage of choice is Digibyte. And what people don't realize is when Digibyte goes away, all of you fools are just going to latch on to another blockchain, right? That you think is a decentralized blockchain, whatever you're thinking, right? If Bitcoin goes away, it's over, right? Like there are no more blockchains, right? Like this is the one chance to get it right. If any of these alternatives disappear, it's like another .com. If Bitcoin disappears, there goes the internet. Like people just don't get that. They just don't get that.
This one really drives me nuts. I mean, like the brand equity issue that we're already dealing with in Bitcoin, customer confidence would be the biggest one. And just to shit a little bit on just entrepreneurs in general and in this space with these damn ICOs, right? Like I see all these like entrepreneurs acting like a damn peacock. Now I'm cussing and then I'll stop. But like they have this like fantail of like flashy visuals and every single buzzword, right? Let's take Jimmy with the hype, and it's just to like ignite the interest of customers or investors, and they launch these ICOs, right? But like the problem is like finally up close, everything is like failing because, you know, they're missing like a feather or, you know, dust stuck to them or whatever it is. But like even when things like start going wrong, like it's great to have an overall vision, but they're not being honest and transparent at all to the process that they're in, right? And like that's, I think, the biggest part of the mess, and also just like harming everything. But what I do love also about Bitcoin is that a lot, you know, like it's pretty transparent on the process that we're also in. And even though, you know, the ecosystem is maturing, albeit a little bit slower than I think, you know, we want, like, you know, we're not alone, and like everybody can kind of see where we're at, and we're honest to like the process. And even though there's mistakes, like that will work out better in the end. And, you know, hopefully, but I don't, this go fast and break thing. I mean, this is just a total paradigm shift. Like no one.
Yeah, no, I mean, it works just fine with all of these shitcoins competing with each other, right? With everybody trying to compete with Ethereum to be a new shitcoin platform for other ICOs. So EOS and Waves and Tezos and what's another one? Maybe Qtum. I don't remember all of them, right? So if you are, you know, trying to steal business from Ethereum so that ICOs are built on top of you, yeah, you got to move fast and break things, because guess what? You don't care. Like, you don't care. Like Dan Larimer is going to leave EOS in about 6 months, and then no one cares if EOS disappears, right? Because he's going to cash out. So if you are competing with Ethereum, sure, you move fast and break things. You make all the money you can now by the pumping of that coin, because it's going to go to zero. You're not invested in that coin long term. Not even Vitalik is invested in his coin long term, right? Charlie Lee is not invested in Litecoin long term anymore, right? Like none of them are. Nothing matters there, right? Like these people will just go and use another one. It doesn't work that way in Bitcoin. Oh, I'm not sure if you're looking at the live chat. I got a tip with a question. I can answer it real quick. If you don't have it in front of you, Lee, I'll read it.
I got it. Hey, Tone Base, that one on T0?
Yes.
Okay, still bearish on T0 after their partnership with BOX on securities token trading. By the way, nice having dinner with you. Did you have a date?
Maybe. I'm not sure who that is, right? I mean, it's BTC Kyle.
Hey, Kyle.
That was probably during the consensus dinner, had dinner with a bunch of other YouTubers. Yeah, so I am still bearish on T0, mostly because this is like their third or fourth pivot. I have no clue what they're doing now. I just know that all of their other projects I criticized because they made no sense. I don't know what Box is, BOX. I have no idea what T0 is trying to do now. I posted an article from a lawyer talking about how bad the T0 token was. The T0 token itself makes absolutely no sense, like all the other application tokens. I don't know what T0 is trying to do. You're not actually going to decentralize anything in the security space unless you go back to the Color Coins project and try to assign securities to Satoshis. But Jimmy worked on that project, and he'll tell you how complicated that project was. So we're probably a good decade or two away from something like this. And T0 is just, pivoting again, trying to get more money again to build something that probably isn't going to work because it's way too early and it makes no sense. And I don't think T0 is the team to probably do it.
Yeah, I don't know what they mean by box, BOX, but if it, which I don't think it would be, but if it's the, like the Silicon company with the cloud content management company, maybe you guys can shed more light. But Aaron Levy's smart, but yeah, that doesn't make sense. Okay, I'll stop screaming about entrepreneurial screw ups in the ICO space. Actually, I like when it's in the ICO space, not just ours.
Yeah, by the way, like people have to understand that like this crypto space, I mean, I'm starting to completely believe this is the bubble. This is the paradigm shift, which always brings a bubble of the 21st century, right? I mean, this is our tulip mania. This is our, the great internet bubble that took place in the 90s. I know there's probably usually a little longer time between these kinds of epic technological bubbles, right? So maybe information is moving faster, technology is moving faster. So this bubble is coming in about 25 years later, which is a whole new generation of people, right? I mean, 25 years later. Very few people were fully involved in the internet bubble in the early days that are fully involved now. That number is fairly small. So we're in the middle of this bubble. Like, how big can this get? Can this last another 10, 15 years before it completely implodes? Absolutely. Can it end tomorrow? Yes, it can. Like, we don't know. We don't know how long this is going to last. And what you will learn in this bubble, that everyone that was a genius in the internet bubble, most of them will completely screw up in this bubble, right? Because they are going to bring, because you don't get to, it's just not how like life and investments work. So some of the biggest geniuses 25 years ago, they could be some of the, biggest failures this time around, because it's not exactly the same. And if you come in thinking that it's the same and you've been there before and you've done it before, you're going to find yourself potentially in trouble. So a lot of the people that, got away with some of the potentially illegal things back in the .com days, and they try to double down on those things in this bubble, they may not get away with it, right? Like, you just because you've been there before, I mean, and again, and if it's your kids that are following, I mean, this is how no family, no private company stays on top for 100 years. They all circulate. Like 50 years ago, how many companies were in the S&P 500? Maybe 2 or 3 of them are still there today, right? This is how things recycle. This is why all of these movies that have like, a corporation that owns the world never happens, because it doesn't work that way. So you just got to keep that in mind. I don't know how I got off on that tangent, but we're about to talk about Intel, and I'm going to mention IBM, two companies that have been around for a really long time.
Yeah. Okay. Last one, just because you got me stirred up. But yeah, the biggest thing is, what the hell are the projects that are even in these ICOs, right? Like, honestly, like I think we actually can't blame the current environment for the current lack of adoption right now, because we need to change how to deal with it. We need to educate, and also like it, that will find the external like changes to accompany it. But like, there's no projects in this crap. There's no company in all these ICO crap. Like, why would anyone ever even, like, from a venture capital, private equity, seed, anyone perspective, or a company with an acquisition, why would, what is there to invest in? Or if you're throwing your capital into something, you're buying something. So I don't understand. First of all, we're making 2 points. One, with a paradigm shift, you cannot have the same business processes and mindset of doing something for commercialization and what we're having in the space. But two, if we want to bring something from understanding of investment and the traditional space, it's looking into the transparency and saying, which doesn't exist. There's like no transparency in these ICOs, but hopefully look into them. One, read Jimmy's pieces and say, okay, blockchain, and this is not I gotta be careful, blockchain. But two, there's no company behind it, so do not invest. It makes absolutely no sense.
Right. There's absolutely no transparency. These people think that just because the tokens are being traded on top of Ethereum, that adds some kind of more transparency. It doesn't, right? Because first of all, these tokens are being traded by anonymous people, and you have no idea what's going on with the company. There's absolutely zero oversight. So it's significantly less. It's way more obscurity. And none of these ICOs are building anything, just like the .coms of the 90s. They didn't build anything. Like, what are some of the successes of the .com industry? I mean, we're not going to really talk about Amazon. Amazon is just catalogs on the internet, right? They just did it better. Netflix is just Blockbuster on the internet. They just did it better, right? So those, I wouldn't really call those, giant innovations. The only thing, I mean, they just put it on the internet and they did it very, very well. The innovation was basically social networks, right? And the only way to monetize those social networks is by selling your data. That's how you monetize, right? These people think that the way to monetize social networks is by printing their own money and paying the money that they're printing to the people that are creating the content. That's ridiculous, right? This is their way of fighting back Facebook to just print your own money. No, it doesn't really work that way. You can monetize by charging a subscription to the network, but you'll realize that nobody wants to pay anything, right? And, like Elon Musk innovated. He created, maps. He used like GPS data, and he built like, I don't know if it was MapQuest or not, but he built one of the first maps. I believe that was acquired by Google or somebody. Don't quote me on the details, but I know Elon Musk was involved in one of the first map engines to, that was really, really cool. I remember when MapQuest came out, it made it a lot easier to be driving around. So things like that, right? GPSs were actually coming out as well. Like, there wasn't the innovation was just who can do it better. But now we're looking at who's going to print more money. And if you can convince more people to print your own money, to use your own money. And of course, you're printing money for yourself first, like any other central bank. Right.
And everyone thinks that being like a first mover advantage, like, is great in business, and sometimes it can be, but in this space, no, everything's a paradigm shift. Last thing to say is all the state governments that are investing in these blockchain projects or trying to launch a muni bond ICO, like, when the governments get scammed, this is going to be absolutely even worse. Like, and then secondly, just for everybody on Tone's point, and then we are moving on, is it's very, Amazon, obviously they are very, very savvy, and I hope that everybody knows that they make a loss on Amazon.com. They make up all their money for the most part on AWS. So yeah. Done.
And again, AWS, right? Because that's another thing, right? Like, AWS, basically they're selling you computer power and storage, right? And everyone thinks that Ethereum is going to work out because they will run their own node with infinite amount of data processing. Meanwhile, AOS is Amazon's most profitable thing by selling you their computer power, right? Like it's complete nonsense, right? Like the industry has already proven to you that you're not going to be running your own node.
Yeah, and okay, well, at least this is like a subject matter that I can talk to. But yeah, and then Intel is that if you guys remember, just as a last piece for specifically Bitcoin, AWS announced recently that they're going to have kind of a Squarespace Wix for blockchain templates. So I think it was the Amazon blockchain template specifically, something like that. So yeah. Anyways, okay. No miners, question mark. Intel seeks to automate DLT block verification. Very simply put, although not simple, saying that Intel is trying to get a patent for a way of verifying distributed ledgers as well as blockchains without having to do anything with mining. I'm going to throw this one over to you, Tom.
Sure. Now, this was a really good article, right? If you go to the end of it, right, it's like, hey, so miners are very inefficient. That's ridiculous. We don't need mining. That's just stupid and a waste, and it makes no sense. So we're going to do decentralized ledgers, which is not actually decentralized. And then they're learning that, wait a minute, that's also very inefficient and very expensive. And way too much processing of data. So you know what? The current database model works just fine. So it's funny how the article starts out talking about how, well, mining doesn't really make sense for 99% of these things. It's let's do decentralized ledgers. And then they're explaining to you why decentralized ledgers also make absolutely no sense, because none of this stuff needs to be decentralized because it's way too much data storage and way too much data processing, and it doesn't actually work. So this is what Jimmy's articles have been trying to explain to you. So IBM is trying to understand what a blockchain is. Intel is looks like they're finally understanding what a blockchain is, and IBM still has absolutely no clue.
And everybody else. Yeah. Any last thoughts or moving to?
No, that's it. I mean, Intel is starting to get it. So keep an eye on Intel. Intel's starting to get it. IBM is just like completely the IBM is going further into stupid land with their understanding of a blockchain, but IBM is starting to get it.
You mean Intel? And yeah, and
Intel's starting to get it. IBM not even close.
And they should, to be honest, with their resources, with their background, with their history. They're a great company. Invented Moore's Law.
You would think so. You would think so. But what happens is, right, it's you get these people whose salary is now dependent on providing more and more bullshit, because then they can hire more people to try and create that bullshit, right? So it's really about the engineers that you hire and have in charge. And so it's all about, who the people are. And this space is going to get very strange because now, because of the ability to print your own money via ICO and buy into these tokens anonymously, it's going to be very, very interesting as to, people have direct profits from how they steer, policy and large corporations.
Last question for you. Curious. Do you think that this could potentially undercut Bitcoin and help the ICOs and alts take a big shortcut?
Which part?
Just what they're trying to do, what Intel's trying to do with.
I think Intel is trying to slowly explain to people that all of this blockchain without Bitcoin is total nonsense. But let's see where they take this.
Well, you got a tip. So one more. And just to say on this one, because it is good, we're almost at 40% with Bitcoin dominance. Okay. Stitches and seams. Is it worth it to build an Amazon-style website to accept Bitcoin, not with BitPay? Why or why not?
Not really, because, you have those. Well, because you're limiting yourself to only holders of Bitcoin, which is a deflationary currency that people only spend when the price of Bitcoin really, really rises a lot. So you're basically, it's no different than building a website and only, it's like you're building an Amazon, but you're only going to accept, I don't know, the South African Rand or some other currency that's like number 30 or 40 on the list, right? So you're just limiting yourself to a short number of users. You have to literally replace Amazon and accept Bitcoin. And you're about, 20 years behind on building out Amazon, right? So at the moment Amazon accepts Bitcoin directly, your business kind of goes away, right? And plus, we already have this. It's called overstock, right? So overstock is like Amazon and accepts Bitcoin. So go ahead and use Amazon or Newegg, right? So there's absolutely no point in doing that unless you think you can outcompete overstock and or Newegg. And unless you know what you're doing, you probably will not outcompete those companies. And Amazon is, Mount Everest above that.
Yeah. I think Overstock has been having some issues recently. But yeah, definitely true.
I like the next question. Why does Bitcoin use ASICs? Because smart people will develop chips to only mine Bitcoin, because using your CPU is grossly inefficient. Something Monero is going to eventually realize.
Yeah. Did they, what did Overstock do? Maybe everybody can help us out. Okay, we are at 40% pretty much, and it's like a little bit of a uptick since. Okay, well, good news.
Like I was really enjoying Bitcoin going up, but you see that other dip? You see the dip back in July of last year?
Yeah, of course.
Right. So when that dip was happening, going to the upside, and look where it ended, right? It ended around December of 2017 with the peak in the price of Bitcoin. And when Bitcoin crashed, it became, the rise of the ICOs and other shitcoins. And you can see that because the shitcoins are in second place with like a 25% valuation currently. That's that little white line. Ethereum is now in third place behind the cumulative of outside the top 10. I believe this is just the top 10 plus other. So other is now in second place. Ethereum is now in third. Ripple's been in second place. Technically, Ripple's been in first place. I tweeted that out. Ripple was in first place when it hit $3. If you actually use the total amount of Ripple in circulation, not in circulation, total supply of Ripple in existence. So Ethereum's been second, Ripple's been second. B-Trash almost made it to second. And that's about it. And then what else we got? Litecoin, Dash, NAM, Monero, IOTA still exists. Wow. Neo, and the other, right? So the other is rising. So honestly, I at this point, it's very possible that Bitcoin's dominance will fall to like 10 or even as low as 5%, but probably around 10%, right? So it's because look, you're continuing to see lower highs and lower lows, and this is continuing. This is going back to 2014. If you look at the 2014 low, that was a new low, came in at about just above 80%. We made then a lower high. Then in early 2015, made a low under 80, made a lower high in 85, in the 85 range, went all the way down to like 70, made a lower high in like 83 range. Then we went all the way down to 36, 37, made a lower high clearly, then a lower low, another lower high. We do have a higher low, but unless we break above that 45%, it's possible that we're out of the zone. But at this point, look, when the crypto bubble bursts, right, you have to understand that 90% of all of the people involved in the crypto space have to lose 90% of all of their money. This is what happens at the end of a bubble. Now, right now, everyone is still getting rich and fat and happy, even though, Bitcoin has fallen 70%. I don't know how this is going to end, but I think the altcoins are significantly weaker than Bitcoin. So however this ends, 90% of the people have to lose 90% of their money. So my most obvious outlook for this is if Bitcoin falls to about 10% dominance, everything is built on top of Ethereum, and then Ethereum implodes. Right? Yeah. Like, I don't know how it's going to end, right? I mean, that would be, my perfect scenario of an ending where 90% of the stupid will lose 90% of all their money. It has to end something like that. It's also possible that Bitcoin would fall to like, $1,000, and then people would get so pissed and so broke, and then it goes back up and then makes another bubble, right? Goes to 100,000, falls down to 5,000. We'll see.
Yeah. I do remember what happened with Box. Just to follow up on that, is that Overstock, publicly traded, and Box, I'm pretty sure they're doing a JV, a joint venture, to launch a regulated exchange for security tokens. So we'll see on that. And I do remember what happened with Overstock, which is actually really funny. You probably remember this, Ton. So they were allowing customers to pay for products with either Bitcoin and Bcash interchangeably. And so like at the time of the error,
did they realize how dumb that is, because people probably sent the wrong coin to the wrong address?
Well, and then they were taking advantage of the mistake to be able to cancel the orders and receive the refund in Bitcoin.
Oh yeah.
So they like epically screwed it up, and the shares, I think, have been like dropping. And
I think that was Coinbase mess up.
It was, I mean, bad news. Okay. So hey, it sounds like EOS has been doing a really good job.
Always. They always do a great job, right? Again,
we nailed it, right? We nailed it on how well they'd be doing when they launched it, right?
I mean, the vulnerability was only going to take out all of EOS. I mean, these people, I think they're incompetent to run a cash register, but yet they're programming, world computers. Like it's I don't even know what to say. Like EOS is just like what did Latimer write?
Help us find critical bugs in EOS.io before our 1.0 release. 10K for every unique bug that can cause a crash, privilege escalation, or non-deterministic behavior in smart contracts.
Amazing how much money you can give away for a bug when you're printing your own money.
Wait, and Tone, the rest of it. Hold on. Offer subject to change, ID required, validity decided at the sole discretion of block one. Keep going.
Oh yeah, of course. It's a decentralized blockchain, but validity of, oh my God. You can't make this shit up. This really is Silicon Valley. We're programming the new internet, and then it's a new internet out of China. These are centralized projects. When are people going to understand that are being coded by complete and utter incompetence, and they're programming things that are actually going to lose you money? It's one thing programming, something like Pandora, where the worst thing that will happen is it'll play a new song, right? Play an incorrect song. But your money's gone. This is what these people are programming.
And secondly, the scammers went right afterwards. But also, I have to note, I mean, even the Chinese are saying that it's, an epic failure. That's awesome. All right. Your other favorite.
I don't understand that picture. Why is the bug eating a Bitcoin?
I got to be honest. Thank you, Cointelegraph, for everything that you do. But these pictures, sometimes I don't understand them. Okay.
You should have used that picture. What was that? Did you see that tweet, by the way, with Dan Latimer wearing a
no.
Did you see that tweet? I don't know if I want to say it on camera.
I didn't. Maybe I'll look it up when you do the next one.
Oh man, all right. I thought I sent it to you the other day. All
right. Roger Ver. Bcash, just Bitcoin Core, actually.
Yeah, I like this is interesting. I thought this was a total joke, but apparently, so Bitcoin Core is now a viable fork. I'm not sure I have Bitcoin Core coins because I think it was a fork of Bcash called Bitcoin Core, but I think I had already sold all of my Bcash. So, but Bitcoin Core is now a viable chain. So every time you hear Roger Ver or anyone else talk about Bitcoin Core, please reference the Bitcoin Core Twitter handle which is now a coin you can go and buy on other exchanges. So a Bitcoin Core is basically the Satoshi's vision
Hello
of
world. Good job.
no SegWit and no big blocks. That's what Bitcoin Core is.
This tweet is really funny. Okay. Great. Well, that's fun. Tone. Okay, so everybody, I did this to make fun of Tone really quickly. There is now well, it's actually not funny. It's very sad. But there's a crypto clinic treating Bitcoin trading addicts, and I just think that it's potentially Tone's fault that he's putting some poor people in this clinic. I will stop laughing because that is a real thing.
Yeah, no, I mean, like, trading is an addiction, like gambling addiction. So it's not much different. Only this one can actually affect 12 and 13-year-olds that are actually trading, right?
Great. So this leads into your TA. You wanna?
Yeah. So I'm gonna continue to do my workshops where I teach people, how to be gamblers. But no, it is serious. And hey, I just wait till the altcoin bubble implodes. It's gonna get bad. It's gonna get bad. Like, it has to get bad. Like if everyone's making money, that's not how the world works, right? Like, it has to get bad. It has to like this downtrend in Bitcoin is gonna end where the majority of the people are rethinking their life choices. It's not gonna end before that. This is what most people don't understand. And that only comes with trading experience or gambling experience, I guess. But speaking of gambling, let's take a look at the price of Bitcoin and see where we are. So when I did my video yesterday, the price of Bitcoin was around 7,100. It did fall lower after my video. I think we went down to just a smidge above 7,000. I woke up this morning and it looked like we bounced about 400 and change. But unfortunately, nothing is really changing, right? In yesterday's video, I compared the current weekly candle of this like little green candle after a big red candle took us below the 50-week moving average. I compared it to the green candle that we had after the last time a big red candle took us below the 50-week moving average. And look at the volatility of the following candle. The following candle went as low as 442. It went as high as 534. And it was a positive candle. So if you just do the range, right? If you do the math on the range was about $110 on a $500 opening. So the range of this candle was a smidge over 20% of the price of Bitcoin. And that was the range of the candle that followed the candle that went below the 50-week moving average. So if we're going to compare the two, right, the volatility of to be in line, last week's candle closed at 73.50, right? So you take 73.50 and you divide that by 5. That gives you a price of about, I don't know, $1,300 or so, right? It's like $1,300. So the range, in order to match what happened in 2014, the current candle can have a range of 1,300 and still be in line with everything that occurred before. So as long as this candle remains under the 50-week moving average, which is what that candle did, the long-term view is fully in line with the busting of a price bubble that also took place in 2014. So nothing really changed. And all this does is on a daily candle, all it does is show you how difficult trading is because I'm still looking for my 9. Now, in order for me to get a 9, I would need a close below 73.30. So if the price on tomorrow's candle closes below 73.30, I do get my 9. And things have been reversing on 8s, quite often. Bitcoin seems to move fast and exhaust fast. It's probably another short some short covering, but look at the volume. The volume on this candle, I mean, it'll probably be bigger than the volume in yesterday's candle because we still have about 7 hours to go. So it'll probably, the volume will probably be a little bit bigger, but overall, volume continues to be fairly low. So let's see what happens. Let's see where today ends. How high can we go on this rebound? Well, we can go as high as $8,000 because that was never back tested, right? We never back tested the breakdown area. So if this is a reversal, it would be a short-lived reversal to $8,000, setting up new trading opportunities for new lows. Remember, the longer it takes to bottom out, the more pain there will be. It's like you want this thing to go to 5,000 or 1,300, and the sooner it gets there, the sooner we can purge the stupid out of the system and set up a scenario where we can go back up. This does not change my most optimistic bearish target of 4,975, but every bounce back to the upside simply delays it. So as a trader in a bearish environment, you want to look for, shorting opportunities or going into cash on bounces instead of trying to catch a falling knife. Would have been nice to time this bounce 2 days from now at a 9, but the price action isn't always accommodating. Here's a 3-day chart, and the 3-day chart doesn't look like it's impressive at all. And the 3-day chart, like here's the thing, right? If the count breaks and we get a green 1 tomorrow, all we might do is set up for a brand new 9 to the downside, which might actually match the 3-day chart, because the 3-day chart still has 3, 6, 8 more days to go, including today, I believe. What's today? 29th, right? So including today, we have 8 days to go. So it's possible that the 3-day chart will get you to another 9, giving you potentially a lower low. And if we don't get a lower low, we will have our descending triangle. Oh, by the way, I'll use the 3-day chart only because it's a little bit cleaner. So, I have to bring back some annotations. So people have been telling me that I think Peter Brandt had a symmetric triangle going. I'm going to make this a yellow triangle, or maybe an orange triangle. Had a symmetric triangle going as something like this, where right. So if you had the symmetric triangle lined up, you can't say that we are bouncing off the bottom of a symmetric triangle. And if this is true and this holds, you could go back up to the top of the triangle, which is at the $9,000 range. If we go up slow, it could be at an $8,500 range. That is possible. I'm using a 3-day chart here. So it's possible at this symmetric triangle. Now, what I was going to look for, a descending triangle if we were to fall to the $6,600, $6,700 range. I was going to draw my descending triangle and look for a drop. I wasn't really looking for the symmetric triangle, but hey, is there a symmetric triangle here? Well, I need 3 points to draw my triangles, right? So I can say 1, 2, 3 on the upside, 1, 2, 3 on the downside. So at this point, if we start going up, I can draw the symmetric triangle, and then you can say, well, which way is this triangle more likely to break? It's more likely to break to the downside because it's coming in from a higher high. And the fat part of the triangle is from 13,000 to 6,000, which is 7,000. And if it collapses from the $8,000 area, going down 7,000 takes you to my $1,300, price range. So Sure, you could draw a symmetric triangle. If tomorrow is an up day, breaking today's high, you can then go ahead and draw your symmetric triangle. I was waiting for the descending one. I guess that's it. I can flip to the 12-hour chart. And 12-hour chart has a green 2 that's not above a green 1. So you might want to wait for either a little more strength or the following candle. But look what's happening here. You have a 7-period moving average below the 30 period, below the 50 period, and they're all declining, telling you that you are in a very bearish environment. Here's the 4-hour chart. The 4-hour chart did not make it to a 9. It did not make it to a 13. Reversed early. The 4-hour chart is giving you a bit of a bullish flag pennant, which is generally a bullish sign. So there is potential here for, you know, for this flag to bounce to the upside, you know, in a candle or two. So that's very possible. And my target, if we all continue to go up, it's, you know, 8,000 and then more downside. Like, I'm still bearish. Like, I'm not, we're into the cloud on the hourly chart. Hey, we got an 8. We're not getting to a 9 here. We're flipping. Let's see what happens this hour. Got 45 minutes to go. Your CMF was diverging all night long, you know, slowly going up as the price was going down. Your OBV was not, that one was still going down. You bounced, your stop losses should have been hit. If I was short in this environment, I would have assumed that if we go back to the upside, it should not pass this line. Once this line gets passed at the $7,200 area, if you were short, your stop losses should have taken effect. Also, there was a 2 above a 1 prior to that, but I probably would have waited for a 3 above a 2. Above this line, you should be out of your short positions and wait for a better opportunity. I guess that's it. Oh, you're sending me messages.
There was a question for you about HFTs. Honestly, I didn't know that the high frequency trading bots were in the cryptocurrency space. I thought that it was automating trading bots.
I don't believe that they are.
Yeah, I think it's just an automated trading bot. But I get, and I don't think it's similar to Wall Street, but I guess.
All right, guys, you have to understand something, right? There's 2 types of bot trading. There is the high frequency bot trading, and then there is algorithmic trading, which executes your strategy. No one is stopping you from writing a bot that executes a specific strategy. You will learn real quick that 99% of these bots will lose you money. You have to write like a perfect trading algorithm to trade, because a bot does not understand the difference between a penny and $1,000. It's whatever you program it to do, right? So programming a bot to trade in because you don't have the ability to sit in front of a computer all day, or you don't have the discipline to act on your stop losses and have the bot do it, that's fine. No one is stopping you. That's perfectly fine. When it comes to high frequency trading, 90% of high frequency trading is literally picking up pennies in front of a steam engine. You have just written a program that is just faster than others, and you are reading what other people are doing, and you're jumping in front of their trades and skimming pennies off of other people's trades. Now, do high frequency trades affect, you know, large position holders? And the answer is no. They really don't. Like, do I like the fact that they happen? No, I don't like it either. I don't like exchanges giving preferential treatment to certain people because they pay them and then they set up, you know, these computers right next to the exchange. I don't like it. I don't like spoofing. I don't like any of that stuff, right? But when people talk about high frequency bots, they don't generally separate, is it picking up pennies in front of other people's positions, or is it, algorithmic formulas to execute trades that are going to be held for longer than a microsecond? Those are very different things, and you have to specify the difference. Just like when people talk about smart contracts, they don't understand that there are smart contracts and then there are decentralized smart contracts, and they're not the same thing. They're not even close. Decentralized smart contracts are stupid. Smart contracts can be very, very good. There's a big difference there, right? Big difference. And I hate it when people throw out terms, but like umbrella terms, and they don't really know what they even mean themselves.
Yeah, and for anyone that does want to learn more about HFTs, Flash Boys by Michael Lewis is a really, really great book. It's obviously contrarian because I agree with Tone that it's an unfair advantage, but it is skimming pennies. And so unless, it's not exactly fit for this crypto world. I don't know about automated bots, but I haven't heard much about them in the space. So I assume they're not killing it, Tone.
No, they're not. I mean, you can write a bot that, hey, every time there is a moving average cross buy, every time it crosses sell. I mean, you can write simple bots that could be profitable over time. People keep trying to automate the sequential system, and I keep telling them how difficult it actually is to do. And another example of blanket terms that people don't understand the meaning of, manipulation, right? It's just a blanket word, manipulation. But what does that mean, right? Are we talking about a 50-year, government, conspiracy of holding down the gold price, or are we talking about Deutsche Bank skimming 5 cents at noon because they can announce the gold price in any way they like, right? Those are two very different things. You got to specify, what are you talking about?
Yeah, we had that fun conversation about that one. And yeah, absolutely. And again, just, being obnoxious, but there's also a big difference between when people throw out market taking and market making. And especially in this world of crypto. So yeah, and HFTs, again, just on that last conversation, that's a very specific thing also.
And guess what? For the last 5 years, I think 60 or 70% of all high frequency trading desks have shut down. This is not HFTs are not increasing, they're decreasing.
Yeah. They say it's a lot of waste of money and talent.
Right, because it's so much competition in high frequency trading that it has now become a 50-50 shot.
Right. Yeah, I mean, real costs, like, narrower bid-ask spreads make up for them, but maybe not sometimes.
Now, I will say it does mess with the market, right? I mean, when you have now the amount of, there's still a lot of high-frequency trading going on and a lot of bot trading going on, but there isn't much of an advantage because someone is always writing a better bot. So a lot of these desks shut down because they weren't really profitable. However, when a bunch of these high-frequency trading bots end up, on the same side of a trade, they tend to crash the market or make it go up. So there are bad things that happen with these things, but they're but it's no different than people panicking. Bots can also panic, so deal with it.
And we could create market structures that make HFTs irrelevant. It's not out of the picture just because what people say you're losing to a robot.
Right, and the only way it's going to happen is with regulation. It's not like a bunch of exchanges are going to get together and voluntarily do this, right? Because they're profiting from giving preferential treatment, right? It's people always say it's like, oh, our industry is going to clean up itself. Oh yeah, that's not what I'm seeing from all of these exchanges in the crypto space.
Right. I think the market has, just to your point, bigger problems than HFTs or, again, robots. I mean, I think there's a lot more going on, and if only because we don't want people to be using, to be so scared that it's rigged, then maybe you should stay away, and that's not your game. But yeah, okay, I'll stop ranting. We're still on screen share. Anyways, everybody have a great day. You can look at the Ichimoku clouds. Better than us maybe today.
You guys get to look at Leah.
Oh, that's very kind of you. So everybody, yes, have a wonderful day. I think given that last story about the crypto clinic, you should end with how you've been told to end. Good luck trading.
Wait, I'm sorry, I missed that. I'm tired this morning.
Good luck trading.
Good luck trading. Good luck trading, guys.
All right,
Talk
bye
to you on the
everybody.
next one.